Hello and welcome to the Fintech Show. Now, just about every day at Fintech Finance, we've been hearing about how open banking is revolutionizing the finance industry. But one question keeps bugging us. How do customers know what they want from open banking when they haven't even heard of it yet? So to find out, we sent Leah Jacobiak to sit down with open banking guru Jim Wadsworth from Mastercard. Meanwhile, I headed to Atlanta, Georgia and spoke with Kevin Emery from UL, a company that's been in operation for over 100 years. Now, of course, we can't talk about open banking without getting the payments perspective. So Charles Damon from Worldpay is joining us as well.
Jim, thank you so much for your time. We're going to look at what Mastercard is offering when it comes to open banking solutions. But first of all, can you just give us a bit of a background into what open banking is all about?
Ultimately, open banking is all about customers, be they business or consumers, having even more control over the data that's in their bank accounts, and also the ability to give a range of third parties access to that data, or even access to being able to make payments from their accounts on the customer's behalf, all founded in consent from that customer, of course. And the only reason you do that sort of thing, let somebody get into your bank account, is if you saw value from the service that that third party was providing. So it's a very new phenomenon in some ways, certainly in Europe. In other markets, it's been around a bit longer perhaps. But fundamentally what it's all about is stimulating innovation, which is great from a fintech's viewpoint, and also stimulating competition, both for the banks, the incumbent banks if you like, but also between those banks. Very exciting change, and we're really at the start of what we think is a very important journey.
Open banking and instant payments will drive a new set of services and a new set of payment rails. This is because on the one hand, we see the emergence of APIs overall in the industry. And I think a really good example of the emergence of APIs is, for example, the development of services such as Uber, where you start to see the use of geolocation APIs, Google Maps APIs, as well as payment APIs, providing an integrated experience. Now, with open banking and access to account and the development of open banking schemes across the world, we start to see that banks start to offer those APIs and make it easier to integrate both account information as well as give an ability to offer payment initiation for consumers to pay through their bank account. Now, if you then add the development of real-time or instant payment networks across the globe, which is now available in more than 54 markets worldwide, you start to see the potential development of alternative payment methods again and new payment schemes. And we believe that this will be a really important development, and which gives, on the one hand, consumers again an alternative means to pay, but also merchants an alternative option to offer their consumers to pay, which offers a number of different benefits to both merchants and consumers. From a merchant's perspective, it's potentially a reduced cost of processing. It gives merchants an ability to receive collections faster and easier. And it gives them also an opportunity to, for example, refund customers faster on their bank accounts. On the other hand, consumers will receive those refunds faster, but consumers will also see the real-time bank balance once they have made a purchase. So if you look, for example, like markets in India, open banking payments have now become really prevalent in the market through a government-backed scheme called UPI. So we see this as one of the most developments happening in the overall payments industry. So payments that are not just being processed through e-wallets or through card rails anymore, but also now the emergence of these new bank rails, so to say, driven by open APIs and instant payments.
When it comes to payment technology, what is it that the customer actually wants?
Well, I think that really depends, because it depends on who you're talking about as a customer. Do you mean the customer as you and I making payments? Do you mean fintech? Or do you mean a traditional bank? They're all very different. But really I think if we take the business perspective as a first point, we always need to look at kind of what the customer wants. And that's really the approach we take, is looking at what the customer wants. Do they want to grow revenue? Do they want to increase their customer base? Or do they want to increase their time to market? So we look at those things. However, these goals, especially in today's world, aren't static either. what a fintech is looking at compared to a 100-year-old bank are completely different. I would say, though, there's a couple of commonalities between these groups. The user experience is really important. This could mean interoperability of many systems or just a really, really good UI design. It's also important when it comes to security. Security should be an enabler, something that helps with traction and the use of a system rather than detracting from it. Let's take card-present payments as an example. From a PIN perspective, it always used to be enter your card, enter your PIN, but now the customers and all the people within that chain going through to the final piece of payment, a PIN could be used in different areas. It could be used for your online banking, it could be used for a mobile app, it could be used to generate a one-time passcode. There's many changes and impacts in different areas from a security aspect, from an interoperability aspect, and from a compliance aspect. So users really want simplicity. Simplicity in many different ways. We could talk about simplicity in payments, simplicity in control that they have over money, and simplicity about how they work with all the variations of accounts that they have. I think if you look at people today, they have multiple accounts rather than, say, my parents who, for instance, would only have one account. So there has to be simplicity for them to use these to move things around. And of course, finally, it's simplicity in terms of how they can secure these accounts, the payments, and the data that we have within them against attacks, because that's what's important now. It doesn't matter so much about losing your card PAN number or your PIN number. It's more about associated data with that. And I really think one of the most complex and challenging ways at the moment of working with businesses is how they make and how they can implement simple approaches to very, very complex systems to really help facilitate the customer interaction and really address the fundamental customer need.
With so many payment options available, do you think consumers are going to start to fragment, or are they all slowly going to start to favour one specific type of payment method?
Yeah, very hard to generalise, to be honest. You and I may choose to use a different payment instrument for the same transaction just because we have different preferences. And that's a good thing, and that's, and I think that does evolve over time. We've seen, for example, the rise of contactless. And now contactless is a very material part of how we all transact, at least in the UK. But it's taken a number of years to get to that point where enough people are kind of comfortable with doing that. And it does take time for behaviour to change. Of course, there are things that look great on paper that over time different providers launch that don't succeed, but that's kind of part of innovation. If something doesn't meet, however good it looks on paper, doesn't meet enough of a customer need or isn't seen to meet enough of a customer need, that's the way it goes.
Unfortunately, in the payment industry, being too early is exactly the same as being wrong. You may have the best payment idea ever, but how you implement it, how it looks, how it flows, how the customer uses it is just so important. So timing is everything in today's industry with launching a new technology. And that's really what takes a payment method from being I don't want to say new, because like I said, I don't see anything as a new way to pay, because you kind of naturally progress into it. But I guess a start-up payment method maybe to a financial giant payment method, if we look at it from a business perspective and a business view on that as an example.
So with the dramatic uptake of different payment technologies around the world, how difficult has it become for institutions and merchants to really process and get a grip of all these different payment methods?
Yeah, so I think this is a really interesting point. With about 300 different payment methods across the globe, it is increasingly complex for merchants to process this by themselves. So what we do as a company is we make it really easy for merchants to have a single access to process those payments across the globe. And it's really important for merchants to make sure that they have the local relevant payment methods available in each of the markets. So if you take Brazil, for example, it's really important to make sure that you have Boleto available, because 30% of the market is represented by that payment method. Take another market like Germany, PayPal should be really part of your payment mix, or some of the account-to-account based payment methods such as so forth, because that is really where the prevalence of each of the consumers of those different markets is in terms of paying. So it's really important to make sure that cards is part of your payment mix, but also each of the relevant payment methods in those markets.
Now, notwithstanding all these various different local payment methods around the world, even within your own ecosystem, there are various ways to pay. Are we going to continue to see payments fragment or converge going into the future?
Yes, is the very short answer. But what I mean by that is we're going to see both. We're going to see them fragment, we're going to see them converge, and it's probably going to happen all at once. So all these methods provide the consumer with a ton of choice, but it's also commoditizing a previously bespoke area of the payments industry. If you think traditionally from a payments perspective, cash is king. Everyone's used cash. And I don't see this going away anytime soon. I've had lots of discussions about cash is going by this time and this is going by that time. And I think it's an idea, but is it going to happen? Personally, I don't think cash is going away anytime soon, not like many of the other technologies we have as well. However, the kind of hopping back to kind of the consumer choice that they have today, a lot of this is causing a lot of confusion as well in the industry of, where I can pay, where I can't pay, where I can use this technology, where I can't use this technology. I think that's really kind of the focus for this fragmentation and converging, where almost let's try and eliminate the technology to the customer, because the customer wants one thing, they want to pay. Are you an Android or iPhone person?
Android.
Okay, sorry about that. But really, me as an iPhone user, if I send a message to someone with an iPhone, it goes over iMessage. If I send a message over to you, it will go as an SMS. And there's no choice there of how I send that message. My phone knows what I want to do at a fundamental level. I want to send a message. And then it works out the best way to do it. And I really think that's the way we have to have an approach from a payments perspective as well, is allow the consumer to send their payment or receive a payment, and allow a technology really to kind of work out the best way to send it. So I think in summary to what may have been a very simple question, more options, more fragmentation, and less complexity.
So finally, tell us about any exciting projects that you're currently working on.
I think firstly, from an open banking perspective, it's a very important topic for us in Mastercard, and it's a privilege to be leading that. We've obviously launched some initial services, and they will continue to evolve both in terms of geographic coverage and building its customer base and so on. We think that has a role to play. I mean, it's interesting for us and interesting for the customers engaging with it, but it's also part of a broader theme, very important for us in Mastercard, around the inclusive agenda, bringing more services to bear for a broader audience, and if you like, from a customer perspective, making it easier for customers to engage with things like electronic payments and digital banking and so on it's clearly very important for us. In markets like the UK, where it's very, very heavily banked, maybe it's kind of less obvious, but you go to other territories, other parts of the world, even other parts of Europe, and actually the proportion of customers engaging with digital banking services is nowhere near as high. And things like open banking, some of the other things that we're doing across Mastercard, we think have a role to play in bringing more people into that economy, which can only ultimately be a good thing.
We talked a lot about payments, and we talk about payments being the original cybersecurity. And really now it's seen how that kind of moves into the other ecosystems we support. So we support other ecosystems as well, whether that be smart homes, smart buildings, IoT, mobility, Industry 4.0. These are all areas that we serve, and now we're seeing our solutions kind of spread more into that area. How consumers care about how secure different IoT devices are. So how does that look from a UL perspective about what we provide to retailers, so they can educate their consumers from that point of view, and services around that type of solution.
Thanks for tuning in to another episode of the Fintech Show. And remember, you can check out the rest of our series and much more over at www.fintech.finance. Thanks for watching. See you around.